the last few weeks in the stock market have felt like the prelude to some kind of big panic dump. So we could easily see that happen. We've got this big risk out there with gold and silver, so keep some powder dry so you can pick some up at the bottom. And this time around, if they do tank, don't hold back. This is the time to back up the truck, because the Fed cannot let interest rates go up much more than they are. They cannot let the stock market tank, and they're going to have to take steps to prevent that. And gold and silver will probably respond to it.
This week's special with Miles Franklin Precious Metal Investments. Kilo Valcambi Silver Bars for only $2.75 over spot. 10-ounce Nadir's Silver Bars for only $2.95 over spot. Call us at 1-888-81-LIBERTY. That's 1-888-815-4237.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend John Rubino from dollarcollapse.com and co-author with James Chirk, The Money Bubble. John, thank you so much for joining us today.
Hey Elijah, good to talk to you again.
Great to speak to you, and it's a very interesting time as we see a lot of the markets moving. I wanted to touch first on the stock market. We're seeing a sell-off there, especially in the Nasdaq. So why is this happening right now?
Well, we're back in the game that the Fed plays with the stock market every so often, where the Fed starts to panic because things are overheating. They start talking about tightening and tapering and raising interest rates, yada, yada. Everybody ignores them for a while. And then when it looks like they're actually going to go through with some of it, the stock market panics in its own right, tanks, and then scares the government into taking it all back. So we've been through several of these in the last, say, decade and a half. And every time it's played out the same way. So investors should, assuming it plays out the same way this time around, investors should, first of all, be very worried about their stock portfolios, because in order to cause the Fed enough angst to get them to take back the tapering, stocks have to fall in a panicky way. It has to be a scary drop in stock prices that looks like it doesn't have any obvious end in sight. And that's the thing that causes the Fed to cave. So you might have to expect that with your stock portfolio. And precious metals investors might have to expect that gold and silver get pulled down, although that hasn't happened yet, which is nice. But in previous episodes like this, they've been pulled down too. Gold and silver have gone down along with stocks. And then the Fed, gives up at some point, starts flooding the system with cash again. Some of that cash goes into financial assets and precious metals, and everything goes back up. If you time it right in gold and silver, you can make a lot of money, because their moves tend to be very exaggerated because they're such small, illiquid markets compared to tech stocks or utilities or energy companies or whatever. So we have another chance again, for anybody who missed getting in at the very bottom of the last few cycles in precious metals, you might have another chance again this time around. But I think the really important thing about this iteration of the game is that it might be the last one, because this might be the time, with inflation rising, normally you would expect the Fed to be adamant about raising interest rates and tamping down inflation. So if they cave with inflation still 4, 5, 6% on the official gauges and 10 or 11% on the unofficial but more accurate gauges, that means they're giving up. There's no chance of controlling the decline in the value of the major currencies out there, because to do so would break the financial markets. And when everybody figures that out, that there's no adult supervision anymore in the financial markets, then all hell will break loose. And that's when you want to be loaded up in real assets. You want your farmland by that time. You want your rental house. You want your energy stocks. You definitely want your gold and silver, because those are the things that money will pour into when everybody else realizes that there's nothing left to prop up the dollar and the euro and the yen, that the Fed is going to have to ease into inflation. And that's just all there is to it for as far as the eye can see.
You mentioned how this might be the last time we see this scenario play out, where the Fed has to step in and save the stock market because of the taper tantrum. So is this the beginning of the end of the dollar then, or what is your perspective?
Well, I mean, there's a whole chain of conjectures here that I'm not completely comfortable, making predictions based on them. This year this is going to happen, but I think that eventually there's going to come a time when we just give up on fiat currencies because it's clear the central banks can't support them anymore. And if the Fed starts easing while inflation is still, ridiculously high by the standards of their targets, then that might be the time, and then if we just give up on dollars and euros and all the fiat currencies, the whole concept is liable to fall into disrepute. Then that's the end of those currencies as we know them. There might still be things with those names out there afterwards, but in the monetary reset that kind of has to flow from this, we may go back to a time when the world's currencies were just names for given weights of gold. The dollar was 1/20th of an ounce of gold. That's what the dollar was back in the day. And we might have to just do that. We might just have to go back to something like that. So we'd still be using something called the dollar, but its reality would be that it's a name for a fractional amount of gold. And what happens in a currency reset is that you, and this is the best case scenario where the governments of the world act rationally instead of just have the market force this on them, when they just declare that this is the change that's going to happen. We're going back to a commodity-based currency. It's going to be on these terms. Your previous dollars are going to be devalued by X amount, so that gives us a big burst of inflation. In other words, prices of many, many things go up in terms of dollars, which means the people who trust the government and hold a bunch of dollars going into that are the ones who get hurt. And the ones who see what's coming, get out of their dollar-based investments in time and into real assets, they make out, And so it's kind of a trap that government incompetence and avarice is setting for regular people who aren't paying attention to this. If we do any good in this world, Elijah, it would be to convince a few more people to see the truth of this and to get out of their dollar-based investments before it's too late. And I'm afraid that the way economic policy works in this world, the rich will see it coming, they'll do fine. A handful of people who are not rich but are paying attention will do fine. Everybody else is just going to be royally screwed. So I'm afraid that's what's going to happen. I wish it wasn't so, but that's the world we live in, and the sooner we figure it out in large numbers, the better it is.
You mentioned how it's possible we could be moving to a new monetary system, possibly backed by gold. I know the Fed hasn't necessarily been talking about that, but they have been talking about a slight change to the monetary system. They've been talking about the digital dollar that just came up, I believe, on January 20th. The Fed announced, put out a paper on that. Your perspective on that and how that might change things?
Well, that's potentially more than a slight change. If they do it in the way that some people are speculating they'll do it, we will no longer have bank accounts. We will have an account at the Fed with money in it that is programmable. That is, if the federal government wants us to spend more, they'll start devaluing that currency in a regular way. They'll say, okay, your dollars are going to be worth 2% less every week from now on as a way to get us to spend it. If they don't like what we're spending money on, they can block those transactions. If they don't like us because we oppose some policy of theirs, they can empty out our accounts. And there's nothing we can do about it because they're the police. We can't go to the cops and say that the cops took our money because nobody's going to listen. So that's the worst case scenario world with central bank digital currencies. And you can bet that as much power as they can get, they will go for. So there's going to be this argument as this goes on about what exactly these currencies should be, what their purpose is, and how much control the government should have over them. The government will go for absolute control. Rational people will lean against that and try to salvage a little tiny bit of control over their accounts. But the ending is likely to be really unfavorable for people who value their privacy and their freedom. which just strengthens the case for real assets even more. I mean, when Fed coin becomes our money, you want to have silver and gold coins at home, and you want to have income producing real estate, and you want to own energy assets. You want to own things that the government can't just arbitrarily devalue. And so we'll see how the central bank digital currency thing goes, because it's also competing with cryptos now. That's another very interesting part of the story, because similar concepts, right? Electronic money based on some kind of a blockchain or other similar electronic database. But one is private sector and somewhat chaotic right now. The other is government-controlled, public sector, and very structured if it's going to go the way they're talking about. So that's an interesting argument too, because you can't have central bank digital currencies in a world where there are also 2,000 cryptocurrencies that people can buy and sell and trade and spend just like they can with official legal tender. So that's going to will have to be dealt with at some point pretty soon. So we basically have a decade of monetary chaos ahead of us while this is all sorted out. We're going into it with accelerating inflation, which may cause the Fed to either tighten too aggressively or just give up and let it all happen. We're instituting digital currencies at the central bank level, and nobody really knows for certain how that's going to play out, but it's highly likely that it doesn't play out well. And we've got private sector money in the form of cryptocurrencies emerging as an entire new asset class that might or might not end up dominating the global financial system. So all this stuff is happening at once. It's a fascinating time. But for anybody who's not an economics nerd like me, I suspect it's a terrifying time too, because I have a lot of friends, especially I would say all of a sudden liberal friends are terrified. The conservative people kind of got this for a long time. Most of the Trump voters or libertarians out there kind of get that we're going in a very bad financial direction. But my liberal friends seem to think that the world would be fine as long as we had Hillary Clinton or Barack Obama in charge. But now they're starting to see that, okay, they got one of their guys in charge and the world is still a mess. So maybe that means that the world actually is a mess and not just, manipulation by Fox News or something. And they're starting to go through the same thought process that maybe a lot of libertarians did a decade ago. And they're coming to the same conclusion that this is a mess. So I'm getting liberal friends ask me how to buy silver a lot lately. And that's completely new. That's something that they probably thought 5 years ago was something that crazed redneck preppers were into, and no normal people would buy something like a box of metal. What would be the point? Well, now they're starting to get it. That silver coins might be something that holds their value while maybe the dollar doesn't, because all of a sudden the dollar's not. They're seeing inflation, they're seeing geopolitical turmoil, and they want some stability. So they're starting to clue into this now. And I suspect younger people with the same political views either are jumping into cryptos or have been into cryptos for quite a while because it's cool technology. But now they're starting to see why it's so useful, because it's a form of money that governments can't mess with, or it can't mess with as easily as they can with the dollar and the euro and the yen. So very interesting time. And the optimistic part of the scenario is that a lot of people are educating themselves and coming to the right conclusions. So we might have a critical mass of people on the correct side of this argument at some point.
Now, you mentioned how a lot of liberal people are also understanding the truth about the financial system and how we're in trouble. One of the things that I find very interesting is that ever since the beginning of the pandemic, at Miles Franklin, we've been seeing a huge increase in demand for precious metals. Do you see this continuing, I guess? Because even if we do end up kind of moving out of the pandemic, it's not like the financial system is fixed or anything. It wasn't actually the pandemic itself that has caused all these problems.
Oh, yeah, the system was broken long before the pandemic. What the pandemic did was it moved up that brick wall that we're heading for, moved it towards us a little bit, because we had to take on a lot of extra debt during the pandemic. And we broke a lot of small businesses. So the economy is not nearly as resilient as it was. It's just got, it's got a handful of gigantic companies right now, and that's basically it. And that's not a healthy system. So we're very unhealthy. We're financially a mess. Inflation is starting to rise, and you can't. We aren't going to go back to a normal world of 2% official inflation just because the pandemic is over. On the contrary, as people come back into the economy, demand higher wages, and then spend those wages, we're likely to see an acceleration in at least wage inflation, which is going to make things even worse. And what the short-term scary part of the story is that we hit a point where people start to panic buy stuff. In other words, they see the necessities of life going up dramatically, and they decide, well, instead of buying just this month's stuff at Costco, let me buy the next year's worth. I'll just load up the SUV with everything we're going to need for the next year. Well, that pushes prices up even further, which causes more people to panic. And you get this kind of runaway train of inflation going, where it's a feedback loop that the government cannot stop without raising interest rates to the point that they bankrupt basically the leverage speculating community, which is to say everybody who requires low interest rates to function financially. And that's almost everybody now, so they're going to be in a box. And that kind of runaway inflation thing is what might make it clear to everybody that there is no fix. Because if the Fed looks at 7% inflation with a bullet, that's heading towards 10%, and they don't act aggressively, which is to say they don't raise interest rates up to above the inflation rate. That's what you need to do. You need real interest rates that are positive, not just slightly less negative. So, 7% inflation, you need 9 or 10% interest rates. Well, that destroys the financial system. So when people realize that those are our choices, then they're going to start acting accordingly, which is to say they're going to start panicking in a lot of different directions. So what makes sense for an individual is destructive for society sometimes. And we're going to see a lot of people acting in that way, getting what they can right now, because who knows, at the cost of much, much greater instability for society as a whole. That could be this year, that's the kind of thing that we're not far from. So it could be a 2022 story. I don't want to say that it's going to be, because there's no way to know that for a fact, but this is it has the feel of something that could metastasize into that thing I just talked about.
Now, how do people prepare for this situation? Because you mentioned how a lot of people might panic buy things, and they might prepare at the last minute, and that's actually not the best thing for society. So how do we prepare for this without hoarding, I guess you could say? I mean, that's kind of a word, right, that people use against preppers, like, oh, you're just hoarding and stuff like that. But you can do this in a prudent manner that doesn't disrupt things. Your perspective on that, how people can prepare in a prudent manner?
Well, I mean, if you haven't prepped, now is really the time to do it, because there may not be that much time left. I mean, the ideal solution would be to go back in time 5 years and start watching your podcast series from the beginning, and then just do what people said back then, because it's a little bit late, very possibly, to do it right in a rational, slow, steady manner now. But I guess it's never too late to start. And one thing that you definitely want to do right now, if you don't have a garden, get a garden. Be 50% food self-sufficient by this time next year. And that takes a lot of the pressure off of food inflation, right? If you're growing vegetables, some of which you put away for the winter, then it's not so traumatic to go to the grocery store or the farmer's market, because you've got most of it already. You've taken care of that. Then obviously, if your finances are dollar centric, if you've got a big bank account with a lot of dollars in it, and bond funds and bank stocks, if you own JP Morgan Chase and Citigroup and Goldman Sachs right now, sell those things, get out of the stocks right now. And same thing with long-term bond funds. If interest rates go up, that's the same thing as saying bonds go down, because bonds and interest rates are just the reciprocal of each other. So in a rising interest rate world, say the Fed tries to fight inflation by raising interest rates, and the markets react to inflation by raising long-term interest rates, your bond funds get crushed. So get out of those things too. And again, I'm not saying that happens in the next 6 months. So you could get out of your bond funds and then wish for a little while that you hadn't yet. But it's better to be a little too early than 1 minute too late in crises. So the things that you should be doing, which you should have been really doing kind of steadily all along, maybe there's some more urgency now to doing it, but things like that. And then, with the rest of your investment capital, make sure it's mostly in stuff that is not affected by the dollar fluctuating like it's going to. And that would be stuff that has utility, and ExxonMobil stock, something, or some other energy related stock. You may have philosophical problems with oil companies, but they and things like them will probably hold up pretty well in a currency crisis. A rental real estate house for sure. If you can buy farmland at this point, that's the ultimate in hard asset. And then of course, they should call you up and buy some gold and silver coins. I think silver is probably more attractive right now just because it's gone up less than gold lately, and silver ounces are sort of the $20 bill of the post-dollar world, whereas a gold ounce might be the equivalent of $1,000 bill or more. So $20 bills are much more useful for most things. So you probably want to skew towards silver as you're doing your stacking right now, and also in the most extreme worst case scenario, the government is going to confiscate a lot of assets, including gold, because they did that already in 1930s. So we know it's possible. They never confiscated silver, and they can't really do that because silver is an industrial metal as well as a monetary metal. So skew towards silver. Do buy some gold too, but that's the direction you want to be going. And here again, there is some urgency, but you don't want to panic buy anything really, and that includes gold, silver, real estate, and energy stocks and things like that. Just do it in a rational way, do it steadily, but understand that you want to complete your process in the intermediate term future instead of the indefinite future. Pick a date when you're going to be done with this and get there.
No, when it comes to investing in precious metals, I mean, this last week we've seen quite a rise in all the precious metals. So first off, your take on that, and then what is a good time for people to start accumulating the metals?
Well, I think the gold and silver recovery has been nice, but it's nothing compared to what's happening. The problem with precious metals is that you've got that potential big drop out there when stocks tank, and so you can see silver go back down to $12 easy. You can see gold to go back down to 1,400 or whatever very easily. These things could happen in a flash crash in the stock market, which, the last few weeks in the stock market have felt like the prelude to some kind of big panic dump. So we could easily see that happen. So if you went out, you heard me saying there's urgency, and you went out and bought all your gold and silver right now, you'd probably regret it. So don't do that, because I don't want a world full of enemies out there that I cost a ton of money for. But do understand that that's the dynamic. We've got this big risk out there with gold and silver, so keep some powder dry so you can pick some up at the bottom. And this time around, if they do tank, don't hold back. This is the time to back up the truck, because the Fed cannot let interest rates go up much more than they are. They cannot let the stock market tank, and they're going to have to take steps to prevent that. And gold and silver will probably respond to it. So, be buying now, be stacking now regularly, but be prepared to buy more if they put it on sale for you. If you see $12 silver, I'm not going to say mortgage your house, but I would be considering mortgaging my house for something like that. It's one of those things where we've missed a couple of those. A lot of us have missed a couple of those episodes, and this is the big one. So, don't do never invest any money in anything you can't afford to lose. But with your excess capital, with what you have that's beyond your emergency fund and and the money that you'll need for the next 6 months to live, gold and silver, if they get whacked, will be a pretty good investment at that point.
All right. Well, that will be very interesting to report on with you if we do see a flash crash like that. It looks like a very exciting 2022 we're heading into. So, John, we really appreciate all your insights today. Before we let you go, if our viewers are interested in learning more about your work, where can they find you?
I run dollarcollapse.com, which basically covers all this stuff. Come on over and there's a join the email list button. Click on that, put your email address in, and I'll send you whatever I write going forward for free.
And any last thoughts before we let you go?
No, we covered the waterfront. I think, well, other than geopolitics, don't forget war is a big possibility right now too. And that just adds to the complexity. So, even if everything else is going along pretty well, you could see the US and Russia start shooting at each other any minute in Ukraine, or the US and China at the border of Taiwan, so stuff like that, which is a total wild card. And also something that happens during the night from a US perspective means that we could wake up some morning and see that the world is in chaos, which just increases the urgency for us to get prepped, right? We need to be ready for a chaotic world one way or another, just because so many things could create that chaos in the near future.
All right. Once again, John, thank you so much for your time, and God bless.
Thanks, Elijah.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.